Hi guys, in today's video I'm going to put you on a penny stock that's set to double. The share price is set to double and also is good to hold for the long term because the company behind this stock is actually very good and they're doing big things. So the share price of this stock has actually made a run up so far, a very good run up so far, but it's currently at a dip. So the stock is effectively on sale, so you can get it at a cheaper price. So in today's video, I'm going to go through the fundamental analysis. So basically looking at articles that would support this company being good and getting behind this stock. And also I'm going to look at technical analysis using such tools like the Fibonacci retracement, trying to gauge exactly where the support regions are for this stock and the share price, and where I believe the share price is going to basically continue its rally from, because it's currently been in a dip. And also, finally, I'm going to give my future predictions for this stock, basically where I believe the share price is going to get to in the future, near future, mid future, or further out afield. And guys, always remember, investment is a long-term game. Basically, don't expect to get in and something just happens straight away, unless you've got insider information, and by the way, that's illegal, or there's something you know, etc. But for the most part, when you're buying stocks, when you're investing, you're not just buying stocks, you're actually buying businesses. Basically, you're buying into the company because you believe that company is stable, is good, and in the long run, you're going to see a return on your investment. Hi guys, welcome back to Investor Prime TV. David here. If you're new, this channel is a one-stop shop for anything investment. So investment ideas, investment discussions, when to get in the market, when to get out. So make sure you guys go ahead and hit that subscribe button and of course that notification bell so you don't miss any further uploads and consistent content like this. So this stock is Zomedica Corp, symbol ZOM. So Zomedica's share price has actually been making a good run up so far. I'm going to analyze to see whether or not the run is sustainable and is going to continue going. So I'm going to go through the fundamental analysis. So basically an overview of the company and looking at strengths within the company as to why you should buy into this company, why you should buy the stock. And also I'm going to look at a technical analysis to try and gauge where the share price is going to go. And also give my future predictions. Let's get into today's video. So we're currently on Yahoo Finance. Before we get into it, if we look at the overview, basically where they're based and what they're about. Zomedica Corp, a development stage veterinary diagnostic and pharmaceutical company, engages in the discovery, development, and commercialization of pharmaceuticals for the companion pet. So already this company is fairly established because there's a lot of people out there who have got pets and who need to maintain these pets, i.e. basically if they fall sick, they need medicines just like humans, etc. So this company has got a good customer base and effectively a repeat customer base. So if we go into the summary of the company, the market cap of Zomedica is 592 million. So the company is currently a small cap company, and the way things are going at the moment, I believe this company is going to effectively become a mid to large cap. So the current trading volume is 89 million shares being traded, which is fairly smaller than the average volume of 133 million shares traded. This basically means that there's a lot of people getting behind this stock. There's a lot of investors buying and trading this stock, which is making a lot of noise for this stock. So at the moment, the beta is 1.3, showing that the volatility of this stock is actually increasing. And you can see by the volumes traded, this stock is very volatile at the moment. So being a penny stock, a lot of that volatility is actually down to people pumping and dumping the stock. But the minute this stock stops becoming a penny stock, you'll see a lot more long-term investors actually in this stock. So we're currently in the analysis. So let's have a look at what analysts are saying about this stock. Analysts are saying the stock right now is a buy. And I believe that, so getting on this stock before this becomes a strong buy. So by the time it becomes a strong buy, you would have already been in it, you'd already be in profit, and you'll just be riding that wave up. So if we look at the first article on Yahoo Finance, penny stock Zomedica jumps 250% after someone paid Netflix star Carol Baskin $299 for a mention. I find that pretty funny, but the reason it's relatable is because Zomedica provides treatment and medicines for pets. Netflix's Tiger King star Carol Baskin appears to be quite the influencer, even when it comes to penny stocks. Little known Michigan-based animal health and veterinarian penny stock Zomedica surged nearly 250% since earning a mention from Netflix's star king Carol Baskin. And if we go into the second article, also on Yahoo Finance, so Zomedica CEO issues shareholder letter as true forma nears commercialization. So I'd like to point you guys down to pretty much the body of the letter. Dear shareholders, I am hopeful that you had a pleasant holiday season and wish you the best during the new year. We at Zometica are excited as we enter 2021, ready for a year of positive events. As a result of the recent increase in the price of our common shares over the last several weeks, investors have been exercising their outstanding warrants, which has resulted in Zomedica receiving more than $40 million of additional cash through January 15th, 2021. All right, the reason I pointed you to this section is a lot of, so first of all, warrants that effectively like options. So if you buy a warrant, one contract warrant, it'll give buyers the right to basically purchase the underlying stock or the shares at the price at a further date. So basically, if you wanted, let's say Zomedica at $3, but you want to have a warrant that goes out to in a year, you believe Zomedica is going to get to $100 in a year, but you want to buy it at today's price at, let's say, $3. So what you would do is you buy the warrant now for $3. So in a year's time, let's say it gets to $100, you would effectively be able to exercise that warrant and buy those shares for $3 a share, even though that current trading price will be $100 a share. So that's effectively what a lot of investors have done. They bought warrants for Zomedica maybe at 40 cents a share, etc. But now that the price is currently at $3, they've been exercising their warrants so that way they can purchase their shares at 40 cents a share. And why is this good for the business? So the business has effectively made $40 million in cash revenue, which is very good because they can allocate those funds elsewhere within the business to effectively grow the business, restructure the business, or get more staff, etc., whatever they need in order to grow this business. So ultimately, that's great news for the business and you and I as the investors buying these shares. This additional infusion of cash further enhances our already very healthy balance sheet. Our cash and cash equivalents are now in excess of $90 million, net of all capital and operating expenditures from the fourth quarter. We expect this amount will be sufficient to fund operations at least through calendar year 2023. Our goal is to be cash flow positive at that point. So again, they're looking ahead as a company. So right now, because they're a fairly small company, a lot of the balances, etc., will be negative because right now they're having to take a lot of loans, etc., to run the company. So what does this mean for the company? So basically, they're giving a forward plan. So right now, actually, they're saying that they pretty much have capital in excess of $90 million. That's a lot of money for a small company. So right now, basically, they have capital to actually put funds, allocate funds into growing this business, but also they're giving a forward projection into 2023, and they have a goal to be cash flow positive at that point. So you may ask, why are they not already cash flow positive, or be worried that they're actually running business at a negative? But for a small company, this is very normal because when you start off a business, you're going to be in the negative and it might take a while before you break even and even make profit. So right now, this company, they believe that they're going to break even very soon by basically 2023. And from that point, it'll be nothing but pure profit. So they would have effectively paid off their loans, etc. And for small companies, this usually takes a long time. But Zomedica, they're actually planning to do this in pretty much in 2 years. So there's a lot of big things to happen to this company and for this company, which is why I believe investing right now would yield great returns in the future in this company, and it will continue to grow. So right now, while it's a penny stock, you can buy a lot of shares, sit on it for a couple of years, and then basically just let the money or let your money make money for you. So we're currently on the chart of Zomedica, ZOM, and as I've mentioned, they've actually made a pretty good run up, and part of that run up, in fact, most of that run up, if not the reason for that run up, was Carol Baskin's mention of Zomedica, which is pretty much the start of a lot of good things to come for Zomedica, because a lot of people would have seen this run up, a lot of people would have pumped and dumped this stock, etc., basically getting it to a good level. And part of the way companies who are publicly traded pay off debt is actually through equity built within the share price. So this is effectively a kickstart to a bullish run for this company. With this run being made, I'd like to see exactly where the bears are going to take this price before the bulls kick in again and continue this price forward or upwards. So I'm going to pull up my trusty Fibonacci retracement tool. So with the Fibonacci retracement tool, the key levels that I look for, the 38%, the 50%, and the 61%. And from those levels, I effectively draw my support zones. All right, so I pretty much have my support lines at $1.05. So the price right now is currently at one of my support lines, so the 38. So I won't be surprised if tomorrow the bulls actually kick in and take this price forward. So, but then again, the bears might continue driving this price down to the 58 or the 61%. But basically, between the 38 and the 61%, I see this as one big buy region. So basically meaning if it gets to these levels and you want to build up a certain amount of shares within your position, then this will be a good time to be adding on to those shares. So effectively getting shares when it's cheaper if the bears are driving the price further down. So guys, for my future prediction of Zometica and the price, I can see this price easily getting to $2.50, and then basically from there on, we're off to the moon, boys. So make sure you guys get behind Zometica, buy up the shares basically while they're cheap at the moment, you know, while it's at a dip, because the minute it runs again, you don't want to be left behind. So if you guys enjoyed this video, make sure you like, comment, and subscribe. And of course, comment below, let me know if you've got Zometica at the moment, if you're thinking about getting in but you weren't too sure. Thanks guys, I'll see you in the next video.